Yeah, told you guys that market structure didn't just ends with higher highs and higher lows and all of that. So on these part two, part three, yeah, part 2A, I will say on the day three, we'll look at the other components of market structure. Other component, this component market structure is shaping the support and the resistance. We're going to take a look at support and resistance level. I'm going to take a look at trend lines, because these are other things that plays in the structure of the market, on how the market is moving between the support and the resistance level. Trend line, we have the trend line is simply the diagonal support and the resistance. And take it at that as well. So we're going to look at the support and the resistance level. That's what we'll be doing. Our focus for today. That will be our focus for today. Yeah. So once again, welcome to the day three of the ongoing CA tutorial event. Yeah, good to have you guys here. So without no delay, let's get to business for the day. So talking about support and resistance, yeah, we've looked at the bullish market structure, bearish market structure, the one that to look at the break of structure, look at the change of character. So in this other component of market structure, which is the support and resistance levels, the horizontal support and resistance level, the trend line. These are all that things that have to do with the market structure that we don't just throw away and just focus on higher highs and higher lows, looking for break structure. No. Yeah, in the beginning, we did talk about the support and resistance coming in form of swing point. All right. So we'll be looking at the other components of market structure, which is support and resistance level. So support. Okay, I believe, yeah, I will take it as everyone here has gone through the basic tutorial index in the community before this event, so everyone understand in simple terms what is support and resistance. So I'm not going to dive deep into definitions because they are all there for you to have gone through it all this right before I'll begin this tutorials event. So, but yeah, what's support? What's resistance? It's a support level is that level where price is tensed or expected to give a bullish reaction or find support to move up. A resistance level is that level that price tends to find resistance. That price
Sorry, boss,
is
please come again.
expected.
Come again with your support.
That price tends to find resistance. That price is expected to react bearishly and come back downward. So that's simply what support and resistance signifies. So if you have gone through the basic tutorial index, you should know that in more detail. So okay, right now we're going to take a look at this. Yeah. Now, how do you map your support and resistance level? Since you say support levels, now we have horizontal support. We have the horizontal support. We also have the zones, which are the rectangular levels. We have the horizontal levels. We also have the zones, the rectangular levels of support and resistance. You get me? And so how do you map a support or a resistance level? So mapping a support level or resistance level, we look at the levels which price respected for at least 3 times. A level which price respected for at least 3 times, 3 touches. We can call that, we can take that as an horizontal level for either support or for resistance. Now, um, I'm going to take this now. Okay, let me take this off. All right. Um, chart is clear now. Clean it up a little bit. Let me take off these levels. All right. To make it clean. All right. Okay. I believe chart is clean now. Okay. You can see this level, this line I drawn here now. You can see how this level was respected. It acted as a support level. You see this first, this touch, first, second, third. This is already. Remember, this is a higher time frame. So if you go to the lower, if you want to go down to the lower time frame, you see how the distance in which these levels were suspended. But I'm going to illustrate this here. Then we'll go back to lower time frame as usual. So you see the first touch, second touch, third touch. Therefore, this level is a valid support level. Is a support level. So all you have to do is draw your horizontal line. Take your horizontal line and place it at the level. Same is it for a resistance level. You have to see that touches. That touches. Three touch. That gives you a level, either for a support level or for a resistance level. When it is below, when price is above the level, it is a support level. When price is below the level, it is a resistance level. As simple as that. When price is above the level, that level is a support level to watch out for. When price is below the level, that level is a resistance level to watch out for. You get me? So that's the three touches. You have to map out three touches. And now to the another way to do this, to find your support. And before I go into that, please, when drawing your levels, your support level, you look from the right to the left, not from a left to right manner. Yeah, we know we want to take a look at historical data, see how price has respected that level or has started on those levels, yeah, right from the past. But we remember recent price action is king, is the best price action. Recent price action is the best price action. So you want to start taking it from the right, check to the left, and see how it's being respected, if it's valid, and not look from the left to the right. No, look from the right to the left. Recency is a key important criteria when drawing your support or resistance level, when mapping out your level. Recency. So you move from the right, look from the right to the left. And pick these levels. Just draw the level. You can as well adjust your level over time. For instance, I take this here to make it do better. You see how it is. This gives me another valid support. Now, if you see here, it was respected here, And now when a level is flipped, remember what I told you, that if it is above the level, it is support. If it is below that level, it is resistance. What does that imply? That simply means a support level can be flipped to a resistance level, and a resistance level can also turn to a support level. As simple as that. And now take a look at this. Now you see this level here acted as support. Yeah, you see it was acting as support here. We'll be taking it as support. Then you see when we add this break here, automatically this level has been flipped into a resistance. We expect this previous support to act as a resistance level. Now you saw when price gave this touch here, rejected from this place twice. Remember, this is a higher time frame. Go to lower time frame, you see how it was respected. Now you see, you come to this level again, you see how price respected this place again. This level is acting as resistance. It was once a support when it was formed there, but later turned resistance. So it's simple. Like I said, when price is above a level, it is support. When price is below the level, it is a resistance level. Just like that. Just like that. So these are levels you watch out for. Don't just look at the higher lows alone. You have to map out these levels. Map out these levels. The support levels, the resistance level, where price is tends to find support or resistance and give a bullish or bearish reaction. You have to map out these levels and trade with them.
Sorry, boss, we did
Trade
not
with
hear
them.
you. Your network just broke now.
Can you hear me now? Can you hear me now?
Yes, yes,
All
please.
right. So that is for that. And as I was saying, another way to get your levels on your chart, you can change your your chart from candlesticks to a line chart. You get me? You turn your chart from a candlestick chart to a line chart. Then the levels will be easy for you to identify. Thereby, when you later turn to a candlestick chart, you now adjust properly. You get me? The levels will be easily identified when you turn to a line chart. In front of us now, you can see now I'm right on a line chart. You can see all we have to do. We said numbers of touches. Okay, let me take this off now. All I have to do is come to this level and okay, look at this here. See, and just drop this here. Then boom, you get it. Just take it and see how it's being respected. Can just take the line chart so easily. You don't want to get confused by the wigs and all of that, and fine, especially for a newbie. You can turn to a line chart to draw this level. Just draw it out, map it out. Go to a line chart, map the level, check. We said three times, at least 3 times respect for it to be valid. Then when you come to a line chart, then you later return back to a candlestick chart. And when you come here, what do you see? You see this level. Now that's for the horizontal level. Now you can also take your support and resistance level in form of a zone. Now you get that by using your rectangular tool. You come here, for instance, I'll take this now. Get me? You can also map your level as a zone. What does this mean? This implies that the whole of this zone. Now you don't just want to okay, the limitation on horizontal levels. Yeah, this helps you paint the entire zone of the support or resistance. This zone help you paint the entire zone, but on horizontal level you just get the actual level. Look for the actual level and just put a line there and say, okay, these are the levels. But then you want to know the entire level. Don't just want to say, okay, draw a line, and especially if you want to trade the support and just place an order. Of course you don't place an order just to trade off support. So but take a look at this. You can all as well take your support and resistance level as a zone using the rectangular tool. And you see now we have this here, this entire zone. This entire zone is a support zone. You get it. Now you see how you see the wicks. You see how price bounces off this zone. So when price is in this level, you said, okay, you can say this is a support level. Price is just at the support. This helps you to look at the entire zone and not just the line. Yeah, some traders will tell you they prefer the horizontal line. Some tells you they prefer the zones. But here is this: the tool, the whatever you choose to use are important. It has to do with how you trade these zones. How you trade? Do you just trade a support level, or just that? It has to do with that. So, but mapping this entire zone can also help you know when there is a fake out or not, because for instance, we having on a horizontal level here, you tend to let me put this up now and show you something. Now you see this line. Yeah, we take this as our horizontal support. Now you see when our price comes below this level and probably closed below. Now some traders you want to take this as a breakout. That is a breakout. But meanwhile, price is still in this support zone. It's still in the zone. So if you want to trade the breakout out, you might want to wait for a total breakout out of this zone. You get me? So if you going to trade breakouts, you want to paint the entire zone, know the entire zone, know this is the entire support zone. But there again, having horizontal levels aren't that bad if you know how to tweak it. Like I told you, you have to as time goes on, you have to adjust your zone. For instance, let me take this off now and show you something. For instance, at first when we saw these levels now acting up, then later you see these weeks, you just simply what you do, you see that the level has been extended downward. You just have to
Sorry to cut you short, sir.
take
Sorry, sir.
take this here.
Uh,
You see?
Boss. Okay. Joshua said he's not hearing you, sir, but I can hear you loud and clear, sir.
Who said he can't hear me?
Joshua. What was his name? Joshua.
So if you can hear me, so that has to be for his end. So you should fix it. Tell him to fix it. So you see what we have here. You see what we have here. You can easily tweak your levels. Don't just place an horizontal level. Okay, this was the at first this was the level we had. Yeah, this was the level we had here at first, and we was playing with this level. But later see that this zone, the support zone has gone beyond just this horizontal level. When you see these wicks below, then you want to tweak your level and take it downward. Yeah, to fit this touch. And you see, nicely, we have this zone. here, and you see later price came to this level and respected this zone as the support. So you can either make use of the horizontal levels or make use of the zone. So with time, you have to backtest this and see the one that is more preferable and suitable to you. And as well, you can make use of both, knowing the entire zone, and as well having you can decide to put just an horizontal level there, but yeah, you know the entire zone, you know how you confirm your breakout. But there again, you want to make things easier, simple for you as a newbie. Just take the level, just map the zone. Map the zone. How do you map the zone? Look at this. You see this first week. Yeah, we add this first week here downward. Then we see price coming to this zone again, respected this zone and closed above. Now we see a third week again, tap into this zone and closed above. This zone is valid. Now let's go to a lower time frame. Let's go to a 4 hours time frame, for instance. All right. Okay. And yeah, here we are. Now, if you come to a lower time frame, you will see at this level acted as support and give us the valid count that we needed. Now, you saw this week here downward, like the one on the daily time frame that closed below, that closed above the zone after that week. Then you see price came here, tested this zone, closed above, tested this zone, closed above. This makes this zone valid. We had 3 touch already. We said we need at least the level should be respected 3 times for it to be a valid zone. And here you see, you get it. Then you watch how it goes all and on, and you see the way the zone was respected. Price tapped into it, later went up, bounced, and all of that. So you want to paint, you can use the entire zone. You can make use of the entire zone. Just take it, take the zone, take the zone. You see the rejection. You can see the rejection. See the rejection. Yeah. Yeah. Back to the daily level. Yeah. Back to the daily time frame, and you see what we got here. You get me? Just we are working on the daily level now. If you go to the lower time frame, you see it was a valid daily level to watch out for. And now you want to get your levels. You can get your levels on all time frames. On all time frames. Like as always, as a trader, either as an intraday trader or a scalper, you don't just want to jump to the lower time frame and start trading and ignore the bigger view, the view on the higher time frame. So you want to start analyzing from the higher time frame, taking the daily for example. You start from the daily downward, see what happened on the daily time frame, then pinpoint the key levels. Then you can go to the lower time frame, 1 hour, 4 hours, 15 minutes, and do your trading. Get me? Yeah. If you are doing top down analysis, you can as well run down from the monthly down. But for your day trade, where after you must have had your weekly levels, monthly analysis already, every day you just get on your chart, look down from the daily downward. So you check these zones, this zone. So this is part of the market structure. This part of market structure you must know. This support and resistance. The opposite is same for a resistance level. The opposite is same for a resistance level. Just have to mark the zone. Okay, for instance, let me see if I get a good example to pinpoint that of a resistance here for you. Now let's take this zone for instance. All right. Okay, for instance, we're going to paint a zone for resistance here. You can see this. You can see this. You can see this level. You can see this level. Yeah. You can see this level being acting as resistance. You see the zone. But in a level like this, I will preferably want to make use of an horizontal level instead of using a zone. But yeah, but here you have it. You see the rejections and all of this. You can now say, okay, price has been in resistance zone right here. So that is that for the zone. For the zone. Remember, we are still talking about understanding the structure. We are not talking about entries now. We'll discuss about entries, but first of all, let's understand the structure. And right now, we are talking about this component, the other components of market structure, which has to do with the support and resistance level and trend line. You get me? Now, please come to me if you can still hear me. Can you guys still hear me?
Yes.
All right. Please, are you guys following? Are you all following?
Yes, boss, I have a question. I don't know if I can ask.
Okay. You can keep your question first. We'll
Okay.
get to that. Oh, yeah, we'll get to that. We'll get to questions then when we are done with the stream. Um, so okay, everyone can hear me. Let me get to the chat and see. All right, you can. Oh, you're on mute. Okay, it's fine. Um, all right. So that is that for support. For support level, you want to map these support levels on all time frames. You want to play your levels, mark your levels. I most times do the horizontal level. Yeah, you can easily get that on all time frames. Even on the lower time frame, 1 hour 3 minutes, just check the level, check the rest rate, check the rest rate, number of times, number of rest rate. You see the rejection at this level, for instance. See the rejection at this level. This now can be taken as a resistance level. You get me? For instance, if I'm going to use an horizontal level here, this is what I'm going to do. I'm just going to take it like this. You get it? You get it? But then if you're going to use a zoom, you're going to use a zoom. You paint the entire picture. Paint the entire picture. Something like this, for instance. Something like this. Remember the width. Take it top of the width so you don't extend it too much. Why? So right here you can see now if you map this resistance level, you can see that currently BTC Bitcoin is being rejected from the resistance level. You can see this now. You have to map this entire zone. You can see Bitcoin is being rejected from this resistance level. So this is the zone. You can pen the entire zone, then you can use the horizontal levels. Okay, I will say this: you can play the entire zone in hexagonal levels. on higher time frames like the 4 hour daily time frame, 1 hour time frame, including the weekly model and all of that, why you can utilize the horizontal levels for 15 minutes and if you trade below those levels. But though you can as well use them all. When we need to talk about entries, I will show you how we can utilize these levels as well for entries. You get me? But these are components of market structure you must know. After taking your you see the higher highs and higher lows now, you know the market is bullish market structure or bearish market structure, you know when a break of structure or cause when there's a change of character. But as well, you want to know when the price is heading towards a resistance or heading towards a support. Don't just say, okay, there's a break of structure and you are targeting, you just target taking position and you target wherever your TP is. You have to know when price is heading towards a resistance level. Aside the fact that we talk about swing points coming in the form of support and resistance, you must also be able to map out these levels where market gets exhaustion and gets a bounce, where market is expected to reject or where market is expected to bounce from. It's important you point these out, mark this on your chart too, and as well you can get levels on all time frames. You can mark your level from on daily, go to the 4 hour, go to the hour, mark the levels. It cannot be too much, but only leave relevant ones. Relevant ones, not okay. For instance, let me do this. Let me show you what I mean. Only relevant ones. We saw this. This was a level. This was a resistance level, or price was below or so, and you see this was the resistance level. Now you can see this level is no longer relevant. It has been violated. It's no longer a level that you want to play. Why this was a level, it was very effective. You played it on the lower time frame. You see this level was acting well. But now you see it is no longer relevant. No need leaving such a level on your chart. It was once a relevant level. But you see, it is no longer relevant. You see the way price just price is now moving above and below it, and like it is not there. It means it is no longer there. You have to do is take it off your chart. Don't have to stain your chart with the levels. Take the levels on all time frames. Leave only relevant ones, and the one you want to trade, the ones you want to trade on. If you are not a scalper, no need leaving those scalping levels on your chart. Take them off and leave the levels of the higher time frame, the 4 hours time frame, daily time frame, 1 hour time frame, 15 minutes time frame, and the case may be. You don't need to go to the 1 minute time frame, 5 minutes time frame, 3 minutes time frame, and map these levels when you know you don't need use of them. Get me? So it's important to map out these levels, but map out authentic levels and leave relevant ones. That's that for support. And before I start taking questions on all of that, for this other component of the market structure, like I said earlier, is the trend line. The trend line. Now the trend line acts as a diagonal support and resistance, and the trend line helps you to know when the market is trending. As it sounds, trend line, you can tell that the market is trending. So on a lower time frame, this trend line can easily tell you if the market is bearish or bullish, because you see higher highs and higher lows bouncing off the trend line, lower lows and lower highs bouncing off the trend line. So you can easily tell. Now to map your trend line, we said in numbers of touches. You need 2 to 3 touches. 2 to 3 touches to validate a trend line. Now, the first touch has to do with the lower wick. You can take the swing point or the lowest relevant point on that time frame. For instance, let's take a look at this. This was the lowest point in price. I'll just take this. Now, when you take a level from this point like this, what you want to do, the second touch is very important for you. The second touch matters. After that, the other touches can just flow. The first 2 or 3 touches is the most important thing you need to get to validate your trend line. Once you miss those first 2 touch, you miss it all. The trend line might not act effectively as it should. Now, take a look at okay, all right. I think I have something else recent I could even use. Now, so let's go to the current price action as we on Bitcoin right now. Now, for instance, let's take this. You see these points. You can see price trending. But then if you take this from here, you see it goes this way. But then if you take it this way, this is what you get. This is what you get. This is a valid trend. You see the first touch, 1, 2, 3. The first 2 or 3 touches is very key for you. Whatever happens here now, it wicks up, below, whatever. The trend line is just acting as it should. You must take the key points. The key points. Yeah. Now, why do we leave this? Why do we exempt this particular is this not relevant? But fine, if we should say okay, let's take the top of the weeks. This is what we will get. But then this won't give us anything to do it for the now. So, but if you just take the second week and you see we have a respected level, this makes it valid. Why? Because this middle touch that we skipped here didn't actually close above. It was just a week that closed below. So we can as well skip it in order to have a valid zone to trade on. And this tells you how the market is going. You can see the market is trading. If you go to a lower time frame, for instance, now you will see. All right. If you go to lower time frame now, this is what you get. This is what you get. This was what the level we draw in. You see, it is a trend. It is a nice trend line. It's a valid trend line. You see the way price is acting on it. You see the way price is moving on it, and it's leading the price. This tells you that the market is trending, not in a big trend, but it's trending. We are getting this high going up. You get me? So this is it. It is the trend line helps you to know when the market is trending. You can use the trend line to know when the market is trending or not. And the trend line is also effective for trading. It's something we do trade. There are entry models around trend line which we look into when we begin to talk about trading and executing this trade. But first, let's understand it. Now, take a look at this, for example. Okay, now you can as well move to a line chart to pin to get a trend line as well. You can move to a line chart to get your trend line, then turn back to your candle stick chart. For instance, take this here, and you see. You see it. Take this for instance. I will be so strong, looking for a new version of myself. But then you turn back to you turn back to your candlestick chart and make adjustments. Remember the lines the line doesn't take wicks into account. It just takes both the candle open and close, the candle opening and it close. So all you have to do is turn back to your candlestick charts and adjust this, and adjust this, and you see what you have there. It's what you have there. And now the trend line can also gives you effective simple chart patterns like the bull flag and bear flag, two trend lines together. So yeah, but we won't go to chart patterns now, but just get it, understand this part of the market structure. The trend line can as well tell you when the market is trending or not. You can use it to know when the market is trending and all of that. You can play it on the lower time frame. Yeah, when you play the trend line on the lower time frame, it's effective as well. Same for the higher time frame. If when you play it there on the higher time frame, when the price is above the trend line, it acts as support. When the price is below the trend line, it acts as resistance. As simple as that. Just simple. As simple as that. Please. Just get it. Take your trend line, mark your trend line. It helps you to know that yes, the market is trending or not. But yeah, you want to take it, like I said, from the lowest point. From the lowest point. Take it from the lowest point. Take it from the lowest point. Then I told you again, the other touches is very important. The other touches, the first 2 or 3 touches is important. You see, after we take this here, you see these other touches here, respected. So this line becomes value. Then you see the way price give a fake out. This was a fake out and return above. And you see price was just moving. This shows that the market was trending. Market was in a bullish market structure here. Get it? So trend line helps you check the trend. Help you check the trend. Are we trending or not? You get me? Helps you check the trend. Know if you are trending or not. You understand this. Have to understand this part of the market trend. I told you you can as well go to a line chart. But yeah, line chart can be effective when getting horizontal level and all that. It might not be effective for trend lines because you have to do a lot of adjustments. So you probably want to stick to your candlestick chart and practice how to get your trend line. Take it from the very low, the lowest point on that particular time frame or that chart. Get that low, and just pick the first 2-3 touches are very important to get. Once you get that, whatever happens there, if it's respected or go below, it's either a fake out or a breakout. It's either a fake out or a breakout. The first 2 or 3 touches are important for you to get the extremes of the wicks. So I'm taking it through the wicks. I take my trend line through the wicks. Take it from the extremes. Get it. Whatever happens, please, I'm repeating this again for emphasis sake. Whatever happens, it's either a fake out or it is being respected or it is a breakout. Like we saw here, this was the breakout. We saw here, this was a fake out. You get me? Is important. So when we talk about trend lines in course of this event, we look on how you adjust your trend line, how you check your trend line here, because trend line can also be checked just like you can check our horizontal levels. So it's important to know this. These are other components of market structure you should look into. These are other components of market structure you should look into. The horizontal support or zones, support and resistance, then the trend line as well, which has a diagonal support and resistance. When utilized properly, there are entry models you can use around trend lines as well and get good trades. So that is that for today's class on other components of market structure. Yeah, I just give you an explanation around that. So now, guys, your questions can start coming in, so I start answering them, and you can look into further examples and all of that. Yeah, your questions can start coming in. You can ask your question. Fifi, babe, you said you had a question. You can ask your question now, please.
Okay. Thanks, boss.